The Federal Reserve just cut interest rates by 50 basis points. What does this mean to you? What does it mean for your accounts? What steps do you have to take to make sure that your accounts are safe and protect yourself from what's about to happen? Matthew Copley here with Copley Financial Group, and I'm here to tell you how to maximize your income and minimize your taxes. What did the Federal Reserve do by cutting interest rates 50 basis points? Well, this is a big deal. We expected 25 basis point cut. In fact, more than 90% of all economists going into this were expecting only 25 basis point cut, and we got 50 basis points. It was actually telegraphed a couple days before. It was leaked to the Wall Street Journal, the reasons why the 50 basis point cut was needed. And so this was actually leaked from the Federal Reserve to the Wall Street Journal to let the market know what was happening. And this is, I think, a big mistake. When you look at the data, when you look at the potential for inflation, I think cutting 50 basis points is a real problem. Now, a lot of you may argue, well, the economy needs it, and I agree. The data says that we need to cut rates. If you look at the recession data, this is a real problem. Unemployment is spiking up. Retail sales are really falling off. And we're seeing a lot of things that happen right before a big recession. For example, luxury goods, if you look at the S&P 500 index for luxury goods, are way down. Companies like Nordstrom and Chanel and Louis Vuitton, their sales are down. At the same time, the sales at Walmart are up. And this is a sign that we are going into a recession. This happens every single time. A lot of the luxury goods drop. At the same time, the staples do very, very well. And Walmart and Costco seem to be the only stores that have retail sales improving. Even some of the other low-end brands are doing very poorly. Dollar General, Dollar Tree, all of these are really struggling right now. So looking at the data, what do we see coming? I really see stagflation. I think that the economy is heading into a recession. I think the 50 basis point clearly shows that the Fed is worried about that. The other reason why I think they cut 50 basis point is the government needs it. We are running huge deficits, and the government has to pay interest on treasury bonds and notes. So when we look at the interest that's being paid, the government's paying quite a bit of interest out on these, and this is a huge part of the government budget. We've hit $1 trillion now just in interest expense. It's more than the entire national defense. All of the Pentagon budget is less than the current interest on the national debt. So by bringing those interest rates down, it's going to save the government a lot of money. Unfortunately, who pays for this is all of us. In prices for groceries, gasoline, airline tickets, everything is going up. And I know it's already gone up quite a bit. I think it's going up even more. We are going to see what we call stagflation, a recessionary environment where unemployment is up, economy is not doing so well, but prices continue to go up. And I'm seeing this personally. Normally, when I go shopping at the grocery store, I don't pay too much attention to prices. Normally, I'm focused on getting a great deal on big ticket items, things like investments. I want to get a great deal on an investment. I want to get a great deal on a house or a car or a piece of real estate. I don't pay too much attention to what the grocery store prices are. And I'll tell you, I did pay attention this last weekend. I was at the grocery store and I was going through and I grabbed a box of granola that the kids like to eat. And I just happened to glance at the price, and it was $8.49 for a box of granola. This is unbelievable. I kind of was floored. I said, is this right? Can this be real? It is. And then I started paying attention. I was going around the store, filling my cart, and I couldn't believe the prices that I was seeing on a lot of items in the store. I guess I haven't been paying attention for a couple years going to the grocery store, but it really surprised me how much prices have gone up. And so this is essentially what I see going forward. I see prices continuing to go up. And of course, a 50 basis point cut should help the stock market temporarily. Unfortunately, if you look at history, when the Fed cuts interest rates, we usually get a short-term blip up in the stock market followed by a big drop. You really need to take steps now. Reach out to your financial advisor, find out what you can do to protect your accounts against what's coming. The Fed lowering interest rates by 50 basis points is a temporary, short-term sugar high for the markets. and is typically followed by a big recession. Look at history. Look at whenever the Fed cut interest rates by 50 basis points, what happened after that. Now, there is no guarantees, and I don't have a crystal ball on exactly what's going to happen, but when you have a probability that every time the Fed cuts interest rates by 50 basis points, this happens, there's a very high probability that that is going to happen. And what's going to happen is a recession and a big potential drop in the markets. You need to hedge your accounts now, and this is urgent because typically from the date the Fed cuts those interest rates by 50 basis points, normally the market starts to correct within 3 to 5 months. So make sure you're taking steps now to protect your account from what potentially could be a major drop. This is Matthew Copley, President and CEO of Copley Financial Group. And if you want to learn how we help our clients maximize their income and minimize their taxes, check out our videos and visit our website.